Hello viewers, in this video I'll be going over Gold Miners Junior ETF ticker symbol GDXJ. Today we are down 77 basis points and we have about 1 hour and 30 minutes left in trading. On the 1 hour chart we are currently oversold on the RSI and the 1 hour MACD is negative as well. On the 4 hour chart we are still on negative MACD and we saw a divergence back in yesterday, so that is a bit concerning. And on the daily chart we are still also negative on the daily MACD, and we are not close to where we are to converging on the MACD that we saw back in October 18. We saw not a convergence but a divergence, so that is a bit concerning. And another concern for the uptrend is what we see this resistance. We see lower highs and basically at the level of support that dates back to September 12th. So right now we are in a very tight range. I would say in the next couple of days we may see a spike in volatility to the upside or to the downside. At the moment it's a bit too early to say. So if we do break below this support, the next support will be the price concentration right here, and that also coincides with the support of the 150-day moving average, which is around the price of $34.80. That is our next support. And as for resistance, if we do manage to break on higher highs, the next resistance will be coinciding with the 50-day moving average, this yellow line, and this resistance back in October 8th, so at the price of $38.70. So if we were to move on higher, that price movement is roughly around 7.2% to the upside, and to the downside that is roughly 3% to the downside. So let's head to the forecast model. So this forecast model is now available for free. You can try out in the link below, so sign up for it. So back to the forecast model, I'll go day by day, where Gold Miners Junior will head to the next coming days. So we have 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So which one of these forecast models we should focus on? Ideally the model that is the best match to the current trend. Right here we have the current trend, and below is the trend that I believe is the best match. And this dates back to January 30th to April 26, 2019. So let me point out why these two charts are similar. So what we have here is we start off averaging above the middle Bollinger Band, and then we proceeded to head down lower to touch the bottom Bollinger Band. Next we see it revert back to the mean to touch the middle Bollinger Band the first time, and then the second time right here. And then finally we head down lower, averaging at the bottom Bollinger Band right towards the end. So we have those points right there, and we start to see a similar pattern shaping in the trend in question. So we average above the middle Bollinger Band, and next we touch the bottom Bollinger Band. And let's just mark all the instances where it touches the bottom Bollinger Band. And we have one here where we revert back to the mean, touch the middle Bollinger Band. Next we see another attempt right here, however it continues to head down lower. So what we have is 1, 2, 3, 4, 5 points. We also have 1, 2, 3, 4, 5 points. So there's reason to believe that the trends and patterns are the same. The outcome and forecast should be fairly the same. So the forecast model that we just examined was January 30th to April 26, 2019. Back then, Gold Miners Junior was down roughly around 3.6%. So I do see that Gold Miners will head down lower in the next coming days. So that is it. If you want this forecast model, it is free for 7 days, so try it out. If you enjoyed this content, feel free to like, comment, subscribe, and thank you for watching.